Welcome everyone to the Kendall Report. It's Thursday night. Another crazy day. Today was probably one of the craziest trading days I've seen. And if you caught any of these swings, you had to have a pretty good day. However, days like today will catch a lot of people on the wrong side. It was pretty amazing, actually. I'll go through the details here in the technicals here in a few minutes, but it was definitely a crazy day. So we had a couple things to talk about before I get into tonight's video. I just want to tell you, I told you the plan for the webinar / symposium, there may be a special guest or two working on that, but that is going to be on Thursday the 10th, and we're working on the times yet. Thursday the 10th and Friday the 11th, and the 11th is Veterans Day. So I need to know in the comments here, if you're watching, if there's any general, we should have had this in the survey. We didn't, just realize it today when we were going through it. But I just want to know if most people are going to be off, the banks are closed, the markets are closed, and we can start at a reasonable time. Thursday will probably start late in the day, and that means there might not be a video for the day like this. But we're putting all the details together. Pretty excited about what's going on. You haven't got the survey. If you can go on the Discord, I did post the link to the survey there as well. There's several hundred of you there that can tune in and at least get that survey if you didn't get the email. And if you really want the survey, we have some pretty good quality information, but I would like you to fill it out if you get a chance. It gives us a lot of insight. Okay, on to today. So Mr. Powell spent a fair amount of time talking today. It was pretty impressive. I like the format. The guy that did the interview on Bloomberg is one of the few people that you can actually stomach to watch. He's pretty neutral most of the time. He doesn't really show a lot of different biases, which is nice to see. Everyone else on Bloomberg is pretty annoying for the most part. But the interview was pretty good, and I named this thumbnail "Powell Tells the Truth." And let me tell you something. I thought it was me up there talking. I'm joking, but everything he was saying is what I've been telling you folks for a while, for the better part of a year. And this is about the whole interest rate normalization situation. He basically is telling you, and told you today, if you watched any of this, is that interest rates are right where they should be, and they've just readjusted everything, and folks are trying to make up whatever he's trying to say. There was actually a huge spike right at the beginning of his conversation. He made some comment about, rates being where they need to be, so that was perceived to be, they're not going to raise, all that stuff, and that's where the volatility started to come in. But basically, what I've been telling you and what Powell told you today is that the back end of the curve, it's finally happening a lot faster than I thought. I just put a video tag on the other day. Can the 10-year make it to 5%? We were at basically 4.99, and the 30-year is printing 5.10. And if you look across the spectrum, what I've been telling you is going to happen is already happening very quickly, which was the front end of the curve. I'll go through this in the detail when we go through the video. I'm going to do a full video, by the way. I need to come up with a format so we'll go through everything I normally go through. There's a lot of action across the board, so we'll go through everything. But what's happening in the yield curve is what I've been telling you, is the front end of the curve, the Fed funds, the 1 year, all the way out to the 1 year, is going to be floating around to 5.20, 5.30. I think effective Fed funds this morning was 5.33. And then on the back end, we're going to see this, it's just going to be a flat line with a little dip with the 2 year. The 2 year is probably going to end up staying the lowest to the point, but it's almost there across the board. The we need about 10 more bips, 15 bips on the 10-year, and then on the 30, it's kind of already there, right? Printing right around 511. So that yield curve I've been telling you is just going to go completely flat. And does it start to? I'll save the rest of this comments for when we get into the interest rate section tonight. But let's take a couple more things. I made a couple notes that Powell made it also clear. They asked him about CRE, commercial real estate. He's like, he doesn't really see anything there, which is what I've been telling you as well. I think he's watching this channel. What do you folks think? But the bottom line is that the CRE, as I mentioned this just last night, is it's really not that material. Everything's off balance sheet for the most part. Some banks haven't, but it's all with the Black Rocks and all these secondary back end folks and people that do those things for a living. And they like to, and I've talked about this before, a lot of these properties, especially even in multifamily, it's like trading the old cards. When I was a kid, we used to collect the baseball cards of the players and trade you a Mickey Mantle for a Roger Maris or whatever. That's really old. Most of you probably don't even know who that is. But the point is that that's what they do with this commercial real estate, these big buildings that are empty. Are they concerned to somebody? Sure, but it's not going to take down the economy. So let's just looking at a couple of my notes, made it clear. We all know this. Labor market's amazing, just continues to crank on. That was pretty evident today with the claims coming in at 198. It was expected to be 211, so that's a way better number. The continuing claims were up a little bit, 1.734, so that's just kind of bouncing around there, but that nothing there. We saw Philly Fed come out. That was -9. It was expected 6.5. And then we saw existing homes come in a little better, actually 396, 3.96 million. Expected 3.9 was the expected number. So in line to slightly better. And then we had LEI, which no one really cares about, but it was negative 0.7. It was expected to be -0.4. So what we're seeing, it's very interesting. Some of these economic measures we're seeing come in a little softer, and it's starting to feel like maybe things are starting to tip over just a little bit. I'm not, like I said, I'm not really in the recession camp yet, but I do see some downside in this market is starting to grow, get some momentum on the downside. I talked about this last night that we might see, I think it was S2, maybe S3, which would put us down at the 42.96 level, and we were printing there just a second ago. When I looked on a reopen, we were down about 6 handles when we first opened here just a few minutes ago. So it looks to me that we look back on yesterday, S&P down 0.85, got NASDAQ down 0.96, Russell down 1.5. What's interesting, all of these numbers are pulling back. We're looking at S&P now up 11.4, NASDAQ up 26% on the year, and the Russell with all the zombie companies minus 3.3%. So not really from the standpoint of overall economy right now, it's a very mixed bag, but it's been this way for a while. And this, I think, is what's confused a lot of folks. If you recall, the Fed was saying no recession, Goldman, all these folks were saying no recession, no recession. Now you have a bunch of folks still betting on talking about the recession, but they're talking about it because they're long the back end of the curve, right? So all the analysts that come on that are telling you that there's a recession, they're all counting on the recession to get the back end of the curve. And I'll go ahead just a little bit. I'll talk about what I think is going on here, and I think it's pretty obvious here, and I'm just going to tie down this interest rate situation, especially on the back end of the curve, is that really what we're seeing here is a combination. I told you yesterday there was two major bond vigilantes out there. The Fed, who's still doing QT, he didn't mention that I heard today. Maybe he did. I didn't hear even a question being asked about it. Then we got Janet Yellen and the Treasury selling lots of bonds. And you think they sold bonds this year, wait till next year. And things are really going to get crazy. So it is and it's interesting. I mentioned this yesterday. They brought out the 20-year maturity again and did what? Forget the number. I think it was 20 or 30 billion. Forget the number right now. But whatever it was, they're willing to put paper out there at this 5% level. And that just tells you that even the planners, the people that plan the refinancing, they're thinking we got to put these on now because we may not have another chance. So I feel sort of sorry, maybe not, for those folks that bought TLT and bought some of these back into this curve expecting things to go down. And as I've been talking about, it looks like at least into year end, and we could run into first quarter, these forecasts are changing as the markets are changing. So I'll cut that off there. I'll go into that more when we get into the 10-year and looking at the charts here. But yesterday was pretty ugly. 10 and 11 sectors down. Everybody's selling. We saw Tesla, some of the love affairs, a lot of stuff underwater. I think Tesla's really in trouble. And those of you, I know I love to make this comment because this will bring out the trolls. Not every car is going to be electric, okay? There's battery issues, there's electric power issues, all that stuff. And I think the luster of the whole electric thing is starting to fade really quick. If you look what's going on, all of a sudden there were a bunch of sales on the Ford Lightning, the F-150 electric. That sales, they've just fallen off the map, and now everybody's buying fossil fuel trucks again. Of course they are. Who wants to be out in the middle of a field trying to run a ranch or a farm and have the battery go dead? And then they have, it's interesting, you've probably seen them, but they have gas generators. They will recharge the car with them. So kind of funny. Anyway, so, but just to summarize, as we come into the end of the week here, it looks like we could print down another day. Maybe there's a little bounce in here. We're getting stretched fairly good as far as the daily ranges. As far as this little sequence coming down here is actually putting us at the point where maybe we're getting into the rubber band effect, and there's a potential bounce. I'll set that up in the technicals here in a few minutes, but it looks fairly ugly. We've got some fib targets on the downside that probably are going to get satisfied, and I'll talk about that in the technical section. So let's go ahead and move on. We'll go into the WaveTech database. I have some comments since it's Thursday night. This video is for Friday. So I'll talk about the expectations for the intermediate database. So let's go ahead and get into that. Yeah, hopefully no crashes like last night. Okay, here we go. 26.19. The benchmark we're kind of watching here right now is at 22%, but this is not getting any more traction, and it really didn't lose a lot. Yesterday was fairly ugly, and these numbers are for this morning's opening. As you should know, everything lags. When I'm doing the database every night, it doesn't run for about another hour from now. So it's a while before the numbers will be out for tonight's run or for Thursday's market activity. So, but this is for this morning's opening. So we had 205 buys, 1,183 sells, a little negative. We were up around 29%. Now we're back to 26. But here's the thing, and I'll bring up the weekly here real quick. The weekly's at 44.93, and the marker that we always watch for is a 42%. If 42% gets taken out, then that is going to suggest that we have more pain and potentially that this little market rally that we saw to 4,600 is going to be the end of the party, and at least tell us that there's a fair amount of consolidation going. And if you look at the world and you try to put some kind of macro situation, or even when you look at all the geopolitical risk and all the things going on out there, it's going to be pretty tough to come up with some kind of bullish scenario. And you haven't heard, and at least I haven't heard, I know Biden is talking here in, I think, in about an hour and a half from right now. And you're not hearing the administration and standing out on the lawn of the White House screaming about Bidenomics, right? And that's the joke, if you will. But this geopolitical risk and market sentiment is just pretty bad right now, and it's kind of tough to get to the point where you can start to get bullish again, at least on the market. As far as I'm seeing it, just seeing more deterioration. Tomorrow night's run in the database is going to be significant. Now, it looks like if we were to close under 4,300 on Friday's close, then that's probably enough to pull a number of stocks down and probably take out the 4,200 or 42% level here. That's 44.93. That's a couple percent. That's not even a big deal. So there's a good chance that we're going to see a potential 39, 38% here, unless there's some monster rally and we close over 40, 44 handle, which doesn't look likely at the moment. But barring that type of activity, we're going to see more attrition here. And just looking back on last week, the numbers that we see on the screen here, where it says weekly long, 1.2 long, and weekly 3.2 long, those are just qualifiers for what type of positions these models take. And they were both negative last week. But if you look, this is from last week. I think these numbers are way bigger. We come into tomorrow night. I think there is probably a scenario here, like I said, for something under 4,200. And those of you who've been around this channel for a while, that's going to trigger me into even more negativity and the potential for the markets going down into some lower numbers. And I'm going to mention some Fibonacci targets here in just a minute. So let's go ahead and get into the S&P and get through the technicals here. All right, as always, we start with the hourly chart. Looks like some type of potential recovery, but now it's going to be probably a dead cat bounce. Not much here. It looks like we stay kind of down and out until we get into the London Open, and then after that, maybe overnight, we can see a bit of a rally. But these trends that are here on the hourly are fairly negative, and I think you'll see we look at the daily market grid that there's something significant that is starting to unfold, and it's growing. A lot of times these technical patterns start to grow and get more powerful as you go through them, and it's difficult to sometimes anticipate them too far in advance, especially when you're in these choppy ranges. Let's go ahead to the daily. So the daily is suggesting, at least on basis the 10-period PPM1, that we've got another day or so, but the numbers that are out there are not super negative as of yet. But I do want to mention these fib targets that I mentioned them last night. This is the third day. Typically, well, we did get an island here with 4 projections on the downside. The PPMs are trying to stabilize here, so the 200-day is going to be the first number you're going to have to watch for. That's 42.58. It's interesting numbers down here because if we look at some of these fib targets on the downside, I'll just put those out there right now, these red dots. We're looking at potential 4,100 even, 39.73, 38.95. Those are numbers I mentioned last night. The algos are not confirming this, and in fact, it's saying that we're not going to get a penetration of the PPM1, the second derivative. It looks like it's forecasting a bounce. I think this is why I mentioned in the opening comments that I think what we're looking at here is a more significant view of what happens on Friday, because it is two things happen. It's the daily close and the weekly close, right? So let's take a look at the weekly just for a second, and we'll go back to the daily. The weekly also has some downward fib targets. The fib target 42.81, has been out there this is the second week. We've actually printed down to 92 on the open tonight. It was interesting. It's coming back down that way now, but we opened at 90, 92, the low, and then spiked up to about 97, 98. And we're seeing some pressure come back in here again, trading 94. But there's and this is on a weekly, and I think if there's going to be anything hit, probably the fib target 41.72 would be an extreme in this pattern, and we'll probably see a bounce. We still have the 40, which is PPM3 is up at a 0.16, and the minimum to expectation here is a 0.15 or better angle of attack. Typically will be enough for support, but I think what I talked about the other day is what's going on. We're probably sandwiched now between the 10 and the 40-period moving averages. So we could continue to bounce around here for a few more weeks. The algos are suggesting that we could see a slight uptick next week. So while the market's overall pattern is starting to deteriorate at the moment, it's not really like this moment where everything's going to come down. Yeah, I'm not sure why you're getting that buzzing bee sound. I'll have to research that. I don't know would you guys confirm that that's across the board? Yeah, so I cranked down the volume on the mic. Hopefully that will help. Just let me know. Okay, but yeah, so this whole pattern that is going on on the weekly looks like, let's draw in some things. Let's spend a couple extra minutes here talking about this. What we could be seeing here is basically just a simple ABC here on a weekly, right into this rising moving average. Like I said, over here it's 0.16, and that looks like that's probably a good number. So we've got this move up, and then we've got an ABC pattern right into this moving average. There's not a lot of, if you look here at what's going on the patterns here, and just look at the algos, the PPMs are all deteriorating on the longer ones, PPM 2 and 3. PPM 1 is showing a little bit of a bounce, but I think all that's telling us is that we have the potential to rally back up into this pattern, into that this little wedge formation that I talk about all the time. It's pretty much where the markets are likely to stay within that pattern. So let's go back to the daily here and just discuss the market grid for tomorrow. And before I leave this, I talked about this last night. 42.97 was our S2 on the weekly. So we printed 92. That could be the pattern. I'm looking at my six-headed monster over here, and all goes on the 1 minute, 5 minute are trying to suggest turning up the 5-second graph. We still have a downward shape 200 here. You guys can't see this, but I'm looking at this pattern, and but the weekly still, or the hourly still showing some downside, as I mentioned earlier. All right, let's go back to daily, and we'll move on after this. So like I said, the 200 is probably the value to watch. That's right now is right at 42.50, 52.59 area. If we look at the market grid for today, right now we're looking at 87 is S1, R2 is 36. And if you look at how we traded earlier today, matter of fact, maybe I'll bring up a 5-minute chart. I just want to look at how this thing blew up, the volatility blew up. I'll show you that here in a second. But the probably looking for an S1, which would be 87, pretty close to where we already printed 92. And then R2 would be 36. 53 puts us up around the highs of where we got to yesterday, and RXT would be closer to that number. So let's go ahead and let me bring up that 5-minute graph, because I want you to see this. This is right here is when Powell started talking. You see this big volatility. This is where we were swinging back and forth, and then by the end of the session, we just started fading down. And like I said here just a minute, now you can see this. This is the algos are trying to turn up a little bit, stabilize along this line, but you still see downward pressure, probably down in toward that S1 number, which would be 87. All right, let's finally get on to the NASDAQ. We should be able to roll to the rest of the presentation here fairly quick. All right, so as we look at the NASDAQ daily, there are some fib targets that are right in here right now. And fib target 1, 14,997 was fib target 1, but here's the targets that matter. The fib 2, 14,816, 14,705. Right now we're printing at 14,827. That's the low. We're printing 39. But you can see here, just like with the S&P, another probably Friday, and maybe we'll be looking, we come into over the weekend, maybe there's a bit of a bounce coming in. But we do have this really looking at right now, PPM 1 is still still positive, even though we're trading just below it here right now. That number's 15,155, and like I said, we're printing 14,827. But we should see that try to bounce back in here, and I think if the market grid can turn up on Sunday night, maybe we get a little bounce. But this downward shape on this 10-period moving average is going to be dominant, so that's going to be the point for you to watch for some type of reversal. Take a quick look at the weekly pattern here. You can see on a weekly, we're coming down. There is some new fib targets on a weekly: 14,266, 13,711, and 13,367. And it does look like, let me fix this value here. It does look like all of these algos are turning south, and I think ultimately we probably get down toward at least fib target 1, 14,260, that bring us into this 40-period moving average, and this is a 40-week moving average. So it looks like ultimately we probably trade between that 40 value and the downward slope on the 10 and 21 periods that are starting to become dominant. And one of the things that happens here, folks, when you get it happens intraday all the time, is that what you see, you get to a certain breaking point, and then all of a sudden there's a surge, and it goes through all of these numbers, and it just blows up, right? So it's sitting there. It looks like, oh, is it going to hold? Then it just drops through. And what we're seeing here is probably next week, while we may see some bit lower numbers, that maybe there's some kind of stabilization. Of course, like I said, we're getting closer and closer to the Fed meeting, and I thought that the comments that were made today, I'll talk about it a little bit more when we go through the treasuries, but I thought that it was pretty reviewing, at least, I guess maybe confirming more than reviewing than anything else. Yeah, so somebody's saying, so fade the pops. Yeah, but against these numbers, against these moving averages, that should be the numbers to watch, these downward slopes. Look at the PPMs and make sure you've got values that are angle of attack greater than -1.5, and if it's minus point, like right now we're looking at PPM1 here weekly, minus 0.17. PPM2 is still positive, but it's kind of rolling over, but it's at 10 that's driving this, and it looks like after next week it's going to accelerate down again. So there's probably more downside, especially with the Teslas and the Apples, and a lot of the Magnificent Seven don't look that good, although you did get a pop in Netflix. I think is up like 16% or something after market. Bear with me 1 second. I'm just fixing something. Okay, so Russell's next. This is a weekly again. We see a big reversal, basically rejected right off of the RXT weekly. 1783 was RXT, the high 1779. A big rejection. We're trading below last week's low. There is a fib target in here, 1701. So we're taking that out. The next level is way down at 1585. It gets ugly really quick here. Let me change the scale just so you can see this. there's a couple fib targets down below here, which would put us down below roughly the bottom end of this range around 1650 that we've been in. Just trying to look at this number here. Yeah, 1650, 1640 is the bottom end of this big consolidation I've talked about, going back to last year, going all the way back to May of 22. So we're definitely pressing the extremes from this level. So doesn't appear that there's a lot of stocks. We did see bank stocks continuing to be a bit under pressure after yesterday's ugly day. They continue to be that. And if you recall, Powell made a comment that he thought the banking system was, especially regional banks, were very important, and that there were not any big issues, but they monitored it very closely. Okay, let's go to the interest rates. So what we're working on right now on the 10-year is the potential for a RTX sell signal, which would suggest that we would stabilize next week and start to come maybe back into this angle of attack. But if you look here, the PPM1 is being projected to come down, and I pointed this out the other night. And this is a big PPM scenario here. Even though the PPM's going down, the market's likely to continue to climb in a generally upward slope. And why is that? All it's doing is showing that momentum is being lost. There's still a lot of momentum out here. The PPM1 on the weekly here, this is a weekly 10-year, is 1.87. We'd have to drop below really 0.15. That there's so much upward momentum here that it's almost in some ways, not exactly, but like when you look at an RSI and it gets way overbought and it corrects it, just the fact that it's overbought doesn't mean the market's going to go down, right? What this is just telling us is that angle is maintaining, and it's going to maintain all the way into, and I talked about this pretty much every night for the last week or so, we're going to see a continuation of that upward slope into late November, possibly into first quarter. So all this is telling us right now, based on the market grid formula that I always tell you, that if we close above that RXT level, then we typically get 1 to 2 weeks. This is a weekly bar we're looking at on sideways. And so there's still a lot of upward momentum. We probably come back into the range. Maybe we continue to print up. I think a lot of this that's going on right now is being driven by really not only the geopolitical background, but also the fact that we've got there's a lot of treasuries being offered, and they're going to continue to load back the truck up and dump on this market. As I've said, the Treasury and the Fed are the biggest bond vigilantes out there. They're the big sellers. Treasury brand new offerings, and the Fed is dumping securities off of their balance sheet. And I won't go through a lot of detail. Maybe as we come into next week, we get closer to the Fed meeting. I do think they're getting the biggest event that I'm looking for when it comes to the Fed is actually when they even announce they're going to slow the QT or end the QT. That's a much bigger event than lowering rates, in my opinion, because that will take some of the pressure off of the longer end of the curve, because they're still selling a lot of this stuff. I forget the exact duration, but I think the duration in most of the Fed's book is probably between 5.5 and 7 year duration, even though they're selling so they have room to bring down their duration a little bit if they can continue to sell the back end, and that's what they've been doing all along. So it's possible. Let's go to the daily just for a second here. I think I mentioned this last night. If I didn't, let's talk about it. The daily is giving us some fib targets to the upside. 535 is the min target. That's fib target 1, fib target 2, 567, 587. I showed you last night on the monthly chart, there's a 645, we'll call it 650 target. So there is a lot higher rates coming. It looks like on the daily we're going to see this thing just kind of continue to ratchet up. So we may get a weekly RXT. Maybe it flattens out for a few days, but the daily is suggesting that we've got some strength into mid next week to deal with. So 5% may be the magic number. I'll probably go in and maybe bring up and draw in what I think is happening here on the yield curve. We'll talk about some of the inversions going away pretty quickly here and what that means. And we'll have maybe a deeper conversation as far as what the back end of the yield curve is really telling you. And I'll just mention this right now is that as money gets more expensive, a lot of times that's not in the case we're looking at right now. There's a lot of supply coming to the market. There's still decent buyers. That's another Powell comment today. He said that the international buyers were still very substantial, and they're watching all this stuff very closely. Even though the rates are ticking up, that's attracting some of that money. But the bottom line is that we're seeing a lot of forecasts here, folks, on the monthly, here even on the daily, that we're starting to see forecasts into 520s, 535 here, and it's going to get very interesting. But I think the other scenario that happens, if the economy continues just to crank, because there's kind of a mixed scenario that's happening there, and what happens is you've got the yields going up, but you're seeing the labor markets and other markets going sideways, and from the standpoint of an economic activity, but you're getting forecasts of GDP to actually continue to accelerate, and which is kind of crazy because that's pretty much the opposite. If you listen to the talking heads in January of this year, GDP was going to go down. We were going to be in recession by now, third quarter recession, blah, blah, blah. Well, we're not there. And the reason that we're not there is just there continues to be heavy consumer spending. And I know there's people talking about, well, the stimulus money is still out there and that's going to run out. Then once that runs out, everything's going to be done. Well, the answer is no. People are working. And I know things have gotten much more expensive. They're kind of ridiculous, actually. There was something I purchased the other day, and I was just like, really? You guys are charging me this? But it's out there, right? So the bottom line is, I think as long as employment continues to stay on, then there's a cycle. Maybe this money doesn't burn off. People are talking about $80 billion a month. No one knows this stuff. I don't try to figure out what is going on with the retail, what people are doing with their money. I think that's probably the most, we'll just say, I'm looking for a good word here. I'll go ahead and use stupid, but it's a stupid analysis to try to figure that out because nobody can figure that out. And all these scenarios is people talking about the little people are going to not be able to spend their money like this. And you get all these kind of elitist type analysts that come up and trying to figure out what everyone is doing. And I just think that's probably why I became a technician and doing what I told you folks for years now, is that what I do is kind of a reverse analysis or reverse fundamentals. If the technicals are saying something's going to happen, what are the events that appear that could be likely to occur to get that to be authenticated in the markets and prices, whether they're up or down? And certainly it's pretty easy to get negative here in the equity markets, pretty easy to be negative here on the bond markets. And it's, once again, yeah, that's a whole nother conversation. Somebody's bringing up CBDC. That's a whole nother conversation. That's for a long rant some point in time. But the whole issue that what we're seeing here is that the way the market, and by market I mean economy and everything, is structured right now, there's still room to move around in spite of seeing gas prices going up. Everything that's happening, it's still operating somehow amazingly strong, and we just continue to see this expansion. All right, I'm out of the loop. Let's move on. Let's get into crude oil. We should be able to head through the rest of this pretty quick. I only got 12 minutes, so let's go. All right, so crude oil, I left the daily chart up here. We basically surged. We got the RXT sell signal on last Friday. We printed all the way up to 87.69. RXT was 85, 55. So we closed above that. We should have got at least 1 to 2 days sideways. We did. Bear with me 1 second. Okay, yeah, so we did get those couple days sideways to down. Then we started to firm up. We got a big day on crude today, on Thursday's action. So we saw this big surge, and we have some fib targets out there that are live right now, which is 88.34. We saw 89.45, 90.95, 92.57. And I'll go over to the weekly because this is right at the levels that I've been talking about. This is the weekly crude oil, and if we just look at where we had, as far as the market grid goes, 89.48. So we basically printed R1, and then we're looking at R2 is 91.48. Maybe we can print up there, and the weekly chart has a bit different profile, suggesting that we're probably going to stay somewhat positive and keeping that angle of attack to the upside at least for another 2 weeks. So expect to waffle around this upward 10-period moving average, 86.49. Going up about 65 cents per week. So that's going to be basically a pivot point where we could go up and down from the standpoint of the prices. So, but overall, it looks like we're going to be able to maintain at least closes over the 10 period at the moment. All right, off the gold. This is weekly. Gold is done a little bit of a moonshot off those lows. And if you folks remember, I'm putting the cursor here on that bar on the beginning of the month on October 2nd. That was where the peak value, I said the next week looks like we're likely to turn up. We did. I thought we'd get into these moving averages. We did that and then some. And I would tell you, Peter Schiff's got to be pretty happy right now. Back up almost to 2,000. But it does look like we have another week up. we're looking at, from the market grid standpoint right now, we're looking at R3 as 1996. We've had a high of 1990 so far. So we're really close to an R3. RXT is 2013. And it looks like I said, we probably have at least one more, maybe as many as 2 more weeks that are going to stay positive. We're not really seeing any acceleration, really more of a consolidation. What we should see from the market grid, this is a weekly chart now, we should start to see in the next couple of weeks that maybe there a channel, upward channel forms, but ultimately the top end of this market grid will fall down and we'll start to establish a trading range. And chances are, whatever the top end of the market grid is going to be, it's going to get sandwiched between these moving averages around 1960, 1940, in that range will be where we fall back into. So there might be another spike depending on how this thing comes out when we come in on Sunday night. All right, so Bitcoin be the final market. Did get a bit of a surge this week. This chart will close out on Sunday, but it does look like more upside for Bitcoin. And we're looking, these are numbers that I've mentioned before. The fib targets right now, 31,980, 34,680, and 36,346. Overall looks fairly bullish, and it looks like we'll continue along this line. It's going to bring up this daily pattern. We printed up almost to this fib target 1 a couple of times here. Yesterday's high was 29,980, and that fib target was 29,140, and then 30,147 is fib target 2. And it does look like at least a couple more days on the upside here as we come into Saturday, probably coming into Sunday night. We should see that. Okay, folks, that's going to do it for this week. Amazing how fast things go. Just watch your mailbox. Once we get everything set up for the upcoming webinar, we'll let you know for sure. Probably the agenda, all that stuff will be out on Monday, and we'll start engaging you folks at the next level. But if you're on our Discord, then you can get the link. I posted a link there in the live chat area, but I did tag everyone on that post, so you can go if you want to fill out the survey. That would be great. I think it's been a great help. There's really some good insight, so I can really focus and craft this thing exactly how it needs to be. And there's a intro video there as well, as you can watch. I'm trying to set up the best I can where we were as far as the expectations go. Really looking forward. Everybody's been asking me to do something like this. It's going to be roughly 8 hours. We're going to schedule it so we have a couple breaks in there. It's a long time, and we'll probably do a two hours and then a break and then another 2, and then I'm hoping that we can actually get in some Q&A as well at some point at different parts of these things. So I know you're going to have to be really careful how this is handled, because we could actually do this for 3 days or 4 days. Here's the other thing that you need to know. We're recording this thing, and we're putting it in a format so you'll have perpetual access to all of these videos and whatever graphics and everything that we put together for this thing. So just that will be there for you to use after the fact. So it's not going to fade off into the sunset after it's done. So anyway, folks, as always, thank you so much for being part of this channel. I wish we had about 3 or 4 times as many folks watching. Maybe if you guys hit that like button, that'll help. And maybe if you tell your friends. And also, I'm still trying to get my Twitter account up to 10,000. I think I gained a couple hundred people this week. Nothing big, but we're getting close at 10,000. There's some things I would like to do. I know a lot of folks aren't on Twitter or X, but it's actually a pretty good platform that is very open. There's a lot of stuff that I would be able to present in a different format there than I can do here on YouTube. So anyway, go ahead and go to Twitter/X and just go ahead and follow me there. And I'm at Portfolio Expert. There's no E in the expert, so it's Portfolio and then just an X and then PERT. So you'll find me there. Anyway, folks, have a great day trading tomorrow. Have a good weekend. We'll see you on Sunday night. And like I said, just watch your email boxes. We'll put this stuff out on social media. Might even do a special video announcing what we're doing as well with this thing. So anyway, have a good day trading, good weekend. We'll see you on Sunday night, 6 o'clock Eastern.